Hello and welcome to another update video about Bitcoin. Probably the last update today at the current price, because normally towards the end of Sunday we see quite a bit of volatility and it could push us into the finalization of this scenario, that we get some more clarity for Bitcoin. In the previous video, anybody who didn't see it, I did talk about the DXY as well and how it could relate to Bitcoin. So anybody who missed the previous video, maybe check the one that I made earlier today. And other than that, we can just go through the wave patterns here again. I want to talk about a little bit about the trade setups that are possible here and a bit of the risk involved as well, because as you know, all trading involves risk. So what you need to do, I believe what most people need to do only, is to manage their risk. Yeah, a lot of people still don't understand that markets are uncertain. Yeah, there is a large degree of uncertainty, and a warning that you have even more uncertainty in the market is if you see a corrective wave pattern, which we have here, ABC, or a diagonal, which we have here as well, 1, 2, 3, 4, 5. There's obviously two patterns. Either we have a red ABC in here, or we've got the green 1, 2, 3, 4, 5. It's either a corrective pattern or a diagonal. So as already explained in depth in the last few videos, if you are not in an impulse, and we are not in an impulse, any trade is more risky. Okay, so anybody who missed that knows it now, because diagonal patterns, they can be a little bit unpredictable. You get more choppy moves, you know, it's completely messy, and this is exactly what we see here at the moment in the chart. This all started when Bitcoin retraced more than it would have been ideal from this top here on the 14th of December to the downside. Still possible short-term upside. This is a possible trade setup, longing from here to the upside in a wave 5 or C. They are two scenarios that would work out short-term in a very similar way. I'm going to show you how this is to be understood from an Elliott Wave point of view as well. It's certainly the wrong way to go all in here, or even to use leverage. So anybody who's been following me knows that. Then in the very short term, obviously, we are still here, most likely in the same pattern in which we were earlier today. So I'm waiting here for a possible 5-wave move to the downside, one more low, which would take us to around 16,200. That would be the ideal target for this 5th wave to the downside of B. Yeah, it's a 5th wave of, well, it's actually the 5th wave of a C wave within B. There's two possibilities. Either we are in the red count here, and then we have within the B wave an A, B, C, and the 5-wave move down here is a C wave, or in the green count, we might have up here a small A, B, and we're now in the C wave, a shorter C wave. That's possible. In both scenarios, I would actually expect one more low. The exception would be if we now break through the yellow resistance. At the moment, it doesn't seem like that. That resistance level is the 50% retracement of the length of the 3rd wave. And this is always an important resistance level, because breaking through that level is basically the first resistance of an impulse to the downside. It would indicate that the move down is already finished if we push through this level. If we do that, no reason to FOMO, because it would usually indicate that we are in a wave 1 to the upside, which would be followed by a wave 2 to the downside, which would be a clear trade setup for a long trade, for example. Here, I'm currently still waiting though for a last leg down. So far, we have only seen 3 waves to the upside, A, B, C. However, we haven't broken below the 16,650 level here. That was the B wave low. If we break below that, it would indicate that we are coming down already. As long as we haven't broken that B wave low, there is still a good chance that all of that, what we've seen here, is just part of a larger wave 4. Yeah, this is possible because a wave 4 is a 3-wave move. And the wave A could also be a 3-wave move. We're now coming down in a B wave and would move up once more in a C wave. That's certainly possible because we haven't even reached the yellow resistance area. That is normally the area you would expect a wave 4 to get into. And it's located between 860 and 17,150. That is where you would ideally expect the wave 4 to get into before it starts to drop. See a little bit weakness here today. I mean, it's Sunday, and, not a lot of trading going on, not a lot of volume. You can see that down here on the volume bars. It's also a wave 4. In a wave 4, people get frustrated, people get bored. They often happen on a weekend, funny enough. But yeah, this could just be a larger ABC. So we need to have an open mind here. Its signal that we are in a larger ABC would be a breakout above the 16,790 level. And the signal that we're already in a wave 5 would be a breakout below 16,650. I would actually, with Bitcoin, I would actually assume we are still in the wave 4. The reason for that is that the move down so far hasn't really been impulsive. And we haven't even reached the yellow area. And that would normally be the area that you would expect a wave 4 to get into. So short-term, very short-term focus here for me to the upside. Just my primary expectation, if you ask me. Bear in mind, this is really micro counting here, but normally you would expect the wave 4 to get higher unless we break that swing low that I mentioned. And then we would most likely get into the $16,200 level. First support would be here, the $16,400 level, the beginning of the yellow of the red support, which is the 50% retracement of the move here to the top of the A wave. Yeah. From here, we have a good chance to move up in a C wave or a wave 5. Both very similar moves. They would be 5-wave moves. Buying down here would be a so-called catching the falling knife trade. Yeah, you're basically aiming for buying the absolute low, which only makes sense if you use a small position size, a really small position size. That's certainly not a trade for everybody. I tend to say that. We usually cover it in the Sunday member live streams as well. That this is a trend reversal area where the trend can, with a high chance, reverse. But buying in here is certainly nothing where you should go all in, or where I would go all in. Or it's also something that I would recommend only for people. I don't recommend anything, don't get me wrong, that I would only do as a person if I could withstand some heat, because there is just a greater chance of failure. Whenever you're in a trend reversal area, the chance of failure is quite high, obviously. So this is a high risk trade, not necessarily in terms of losing a lot of money. If you have your position size correct and if you have the stop loss set quite tight, you're not going to lose a lot of money. However, it is high risk in terms of it could just fail easily, because you're basically buying into a downtrend. Yeah, but it's not just you simply just buying red candles. No, you have some tools here. So we are buying basically in a support area, in a FIB support area. We have targets where we say the wave 5 would most likely hit. And ideally, we also see a bullish divergence at that point on the MACD, for example, on the 1 hour or 4 hour MACD, which we don't probably see yet because we haven't really seen that last low. So yeah, we just need to be a bit more patient here. But what you can see on the 4 hour chart is a possible bullish crossover on the MACD. Yeah? So that's certainly interesting. But for that small wave, we probably need to use the 1 hour. And yeah, here it's now getting tough. Yeah, we might get a zero cross on the MACD. It all depends. If we drop once more lower and then see a higher low on the RSI or the MACD, it could indicate here that the low is nearly in. And those are the tools that you use for the catching the falling knife trade. Yeah, but it's really a high risk one, so a smaller position size usually. I would use that at least. And then if we then really go into and that will be the trade that's better for most people. If we then really start to move up here in a wave 1, 2, 3, 4, 5 pattern, it's this wave 2 that is yeah, let's say a higher probability trade to work out, because you get 5 waves up. So you have a first indication the trend is shifting. And then if you get 3 waves down, ideally into the region between the 50% to the 78.6% retrace, that is normally for most people the better trade setup, or anybody who got in here and it worked out can scale up here, for example, and then take profits along the way. Also bear in mind that this wave 3 obviously includes 5 more subwaves, so you could also scale up more in this small wave 2. So you've got a high risk trade here, I would say medium risk here, and low risk in here. And yeah, that should also reflect in your position size normally. Yeah, that's normally how you would do it if you trade with Elliott waves. Obviously setting a stop loss below the low of the wave 2 then, or below the wave B here, the swing low. But yeah, this is certainly an interesting trade setup. But again, this is just catching the falling knife, because this could just go through. Yeah, it could also be that we come down in here, we only see 3 waves up, and we'll see 5 down and break down completely. So overall, as you know, my expectation is still that Bitcoin will make one more low. I'm not telling you here I'm bullish on Bitcoin. What I am, though, is possibly that I see some short-term upside potential here in a wave B or C. But ultimately, it will be the wave that is coming out of this box that will tell us much about, are we actually in a beginning of an uptrend, or are we in a larger downtrend? We only see a corrective move to the upside. So you hear the dog in the background actually, so I better finish the video off. Said everything anyway. So yeah, hopefully you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, please check out the channel membership, and also make sure you check out the trading course on the website if you're interested, and maybe also Instagram and Twitter. Thanks a lot for watching. Bye bye.